Hey guys, what's up? I'm Erin and welcome back to the channel. The petrodollar system, which has been in place since the 1970s, officially ended on June 9th, 2024, as Saudi Arabia decided not to renew its 50-year-old agreement with the United States. This significant development means that Saudi Arabia will no longer exclusively sell oil in the US dollar. While this is certainly a macroeconomic event, it will likely have implications that ripple through our economy and impact us on a micro scale. The petrodollar deal significantly contributed to the strength and global dominance of the US dollar. It required countries to use the US dollar to purchase oil, and since oil is a critical global commodity, it created a constant high demand for US dollars. As a result, many countries held large reserves of US dollars to facilitate oil purchases and other international trade. This reinforced the US dollar's status as the world's primary reserve currency. Countries exporting oil, particularly those in OPEC, ended up accumulating a vast amount of US dollars, and then these petrodollars were then reinvested back in US assets, think treasuries, stocks, and real estate, ultimately supporting the US economy and financial markets. The recycling of petrodollars back into the US financial system helped to stabilize and strengthen the US financial markets. High demand for the US dollar globally helped to soak up excess US dollars, which helped to reduce inflationary pressures on a domestic level. This helped to keep our interest rates low, which helped to bolster and grow our US economy for the past several decades. As to why there's been a shift away from the dollar, it indicates that there is less of a desire to have a reliance on the US dollar and form new alliances with other major economies like China and Russia. This all comes in the wave of the BRICS nations, Brazil, Russia, India, China, and South Africa, developing a new payment system based on cryptocurrency and blockchain, aiming to reduce their reliance on the US dollar for international trade and financial transactions, fostering greater economic dependence among member countries. It is worth keeping in mind that as of right now, the BRICS nations do not yet have a unified financial currency, but they are actively working on developing a payment system to facilitate international trade. So what does this mean for you as an individual? How could this affect you? The end of the petrodollar deal is expected to decrease global demand for the US dollar, potentially leading to its depreciation. A weakened dollar could make it more expensive to import goods from other nations, further leading to an increased cost of goods. We live in a truly global economy where so many of our goods, from personal goods, food, clothing, smartphones, larger scale items like automotives, industrial goods, and so many other things are imported. This intense reliance on imports makes our economy sensitive to international market fluctuations and trade policy. And it goes beyond simply importing goods. As the US dollar is the predominant currency for foreign transactions, so many of these foreign nations keep a surplus of the US dollar on hand to facilitate these transactions. But it's not as if they're just keeping these dollars locked up in a room somewhere. They invest them. They actually buy US government bonds and they reinvest back in our economy, and our government uses this money to complete projects. With a lesser need for the US dollars, other nations will have less of an incentive to store as many of those US dollars, and thus less money will be pumped back into our nation. In order to attract outside foreign investments to support the dollar, the Federal Reserve may consider increasing interest rates. After all, higher interest rates lure in investors. Think about it on a personal level. If you're looking to open a savings account, are you going to choose the one that's offering a 4% return or one that has a 5% return? It's pretty much a no-brainer. Foreign nations are also attracted by higher interest rates, but this is difficult territory. Because while we love getting a higher return on our cash accounts, interest rates that increase too much hurt the US consumer. It raises the interest rates on mortgages and auto loans and student loans and credit card debt. It makes borrowing money much more expensive, and this in turn slows down the economy. And all of this comes at a time where we're on the heels of dealing with stubborn inflation. But the lapse of this deal could continue to increase the inflationary pressures within our economy, keeping our interest rates at a higher level and increasing the cost of goods. Over the past 30 years or so, we've seen a gradual yet consistent decline in the storage of the US dollar as an exchange currency from foreign nations. The share of reserves held in US dollars by central banks dropped by 12 percentage points since the turn of the century, from 71% in 1999 to 59% in 2021. But the good news is it still represents a sizable portion of this market share at 59% of stored reserves. The next most highly stored cash reserve is actually the euro, coming in at 21%. So the US dollar is still the premier currency when it comes to international trade and foreign transaction, but we will likely see its dominance weaken in the global marketplace as more and more countries start to explore alternatives and diversify their holdings beyond the US dollar itself. But it's worth noting that this will be a lengthy process. We're looking at years and potentially decades. It's also worth keeping in mind that the US dollar wasn't always the world's primary reserve currency. Back in the 16th century, it was the Spanish dollar that was widely accepted for international trade, but that was later replaced by the Dutch guilder. And the 18th century came along, it was actually the French franc that dominated the marketplace. And then in the 19th century, it was actually the British pound. So it's worth keeping in mind that change does take place. The US remains a dominant global player due to its military capabilities, economic influence, technological innovation, and cultural impact. However, with the rise of other major players like China and the European Union, along with emerging challenges in international politics, economic shifts, and technological advancements, we're seeing a reshaping of global power dynamics. The US still has a critical role in international affairs, but its uncontested dominance is no longer guaranteed. So what can you do on a personal level? Well, as far as how things play out on a macro scale, there's not much. I'm a big fan of saying focus on what's within your realm of control. So continue doing what you're doing. Continue saving and investing for your future. Yes, we may experience more volatility in the marketplace going forward, but taking a piece of today's income and setting it aside to protect your future is something we should all be doing. And my favorite way of doing this is simply through dollar cost averaging. Just a small piece of every single paycheck goes towards investments. Yes, what is happening in the marketplace will have an impact on the dollar globally, but that's not to say that the dollar is disappearing. It's not all doom and gloom. If these actions do increase inflationary pressures and keep interest rates elevated, it's worth making sure that you're more disciplined with your financial habits. That means looking at the big expenses, making sure when you buy a car, it's one that you can afford. When you buy a home, it's making sure that it's one that fits well within your budget. Making sure that you're sticking to these financial guidelines so you're not constantly living under financial strain. Also, remember that a healthy portfolio has a good amount of diversification. That means when it comes to investments, you have exposure to US-based companies, but also some exposure to international companies. And maybe you have some exposure to real estate, even if that's simply through your primary residence, and maybe some alternative investments. Greater portfolio diversification helps to reduce volatility, and that can bring great peace of mind. At the end of the day, it's good to keep informed on what is happening on a macroeconomic level. However, don't let what's happening in a macroeconomic environment cause you to become overreactive in your personal life. Generalized advice still holds true, and that is to simply stay the course. What are your thoughts on this deal coming to an end? Leave your thoughts in a comment down below. I post new videos every single week. If you got anything at all out of this one, please give it a like. If you're new here, please consider subscribing, or if you know of someone who might get something out of this type of content, please consider sharing. I'll see you soon. Bye.